shake my hand. 365. Hope you guys are doing well. It's a very quick video because everybody keeps asking me about crypto. Crypto is crashing. My crypto portfolio is down 10%, 12%. Should I sell? Should I let go? So today's short video, while you guys are waiting for the real long videos, which are actually done, so I'm just going to start uploading them, is about
emotional damage. You want some therapy?
Okay, it's about emotional damage, and I'm going to show you why. I'm going to show you why this is absolutely freaking important. Absolutely freaking important. Check this out. Right, so let's quickly find. Okay, first of all, Nasdaq 100. I told you guys to buy here in this gray zone on the daily time frame. This happened. I told you where to sell. We sold. This was. I know, so people have a thing of, is he making this stuff up? Does he tell us this all the time? Because you guys always forget, my stuff is literally always on social media. So if you come here on our YouTube channel, 28 November 2021, the first asset that I deal with in the traders war room is Nasdaq. There is that gray zone, fundamentally based on people who understand how we trade. But if you don't know how we trade, it's like a basket of stocks. So now my personal bias. You know, slightly outperform. Right. So the greatest, safest world investment vehicle by Warren Buffett is SP 500. Blah, 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 blah. Look, I'm not going to look for it, but the point is, it's right here. I should have looked for it before, but I promise you that gray zone based on sentiment, right? So it's nice to very ready to become. It's safe to say I talk too much, man. It's somewhere here. I just want to flip to the daily time frame so you see it for yourself, and then we're good. And I'm on Fiber, so I don't know what's up. Maybe it's the rains that are slowing down the internet, right? So we're still on Nasdaq on the weekly in the video. There we go. There we go. Most losses I made a lot of the times. Pause. Right. So sell up there, neckline into this gray area, 15,400, 15,300, 15,200, hit the trend zone. That happened yesterday. Actually, I got triggered yesterday. Then I added a small position now. Right. So if you're in this, please let me know, because then it's nice to know how many people are actually using the stuff in the war rooms. Yeah. And by the way, it's gone up 1, 2, 3, 4, 5, 6. We are up almost 700 points on Nasdaq. All right, so that's actually freaking incredible, right? So if you're actually still in this trade holding, if you sold with me, I saw Mbasa's comment on Facebook, on one of my Facebook posts, who remembered the sale and took the sale. So I'm just trying to find how many people took the buy as well, all the way up, right? But yeah, it's January, guys. The January effect for these stocks is normally very compelling. We saw this move in November. It's now starting to take effect, right? So January effect is what's technically happening to crypto. So let's talk about crypto, because I want to make this a very short video, right? Let's go to Bitcoin. Remember, we are talking about emotional damage. Emotional damage, baby. I'm not laughing. It's funny, but it's not. Right. Look, you are in pain. You are absolutely in pain if you bought Bitcoin at an all-time high. An all-time high being 65,000, 68,000 US dollars. And the last time Bitcoin was somewhere up there was towards the end of the year, the big pump. So look at this, from about October up to like middle of November, 10 November, we got to that ultimate all-time high, 68,000. Now, as soon as you got there, the minute Bitcoin did a massive new all-time high, breaking this higher high, making a slight, there's not even much of a big difference, right, between this high and this high. It's been slamping down, right, up until this predicted place that we spoke about in my previous post. Also on social media, I said Bitcoin's gonna buy here on the 29th of November. It did, went all the way up there. I tried to buy again here. I got stopped out. I've already posted that and explained why. And now we want to see if these levels are going to hold. The reason why you are suffering, the reason why you're seeing red in your portfolio is because you have no basic understanding of investing. Now, you know what it is, you know why you bought, but you don't really understand this asset. When this asset makes all-time new highs. This asset requires a cool-off period. Number one, just in general, let's say fundamentally nothing was going on in the world. Once we get to a new all-time high, we gotta go down. Once we go up here, we gotta go down. Once we make a new high, we got to go down, because correction is very important for a $2 trillion cryptocurrency cap, right? The crypto markets are now 2 trillion, and they are making their way slowly but surely to replace equities. Correction is important. That's number one. But fundamentally, Ethereum, same story. Ethereum. I know Ethereum, there's some emotional damage right there. Right? So the buy zones that I spoke about got hit 3 days ago, 4 days ago. But I don't really care for this to work, to be honest with you. In November, I did, because in November we were chasing targets like $10,000 US for Ethereum, $100,000 US for Bitcoin before the end of 21. Now I really don't care. Now, honestly speaking, I've broken even from this. I have no intention. If this thing stops me out, all I've done is to make sure I don't come out in a big loss. All right, it's as simple as that. I am not holding for big gains, because there's a better target for Ethereum. So all of this actually needs to be deleted. But I don't want to, talk for too long. This video needs to be about 10 minutes tops. So we'll deal with all this stuff in the war room. All right, we'll deal with all the trade signals in the war room. I want to just focus on your trading psychology. If you're not ready, fundamentally for how the crypto market works, here is a rule of thumb: hold for 365 days. What does this mean? It means don't check it, don't care, don't look. This is not about trading. In trading, you have to manage your stop loss. In investing, just buying. Hold for 365 days. Make a decision after a year. Make a decision to withdraw, to close, to declare a loss, to declare it a scam, to call yourself profitable after a year. 9 out of 10 times, the people who hold after a year are super rich. Number one. Number two, they decide to hold for 5 years because they finally get it. You still don't get it. You bought this asset at an all-time high in November. It's now January. It's been less than 60 days and you're already complaining. You still do not understand it. You are the same people 9 out of 10 times who are patient to wait for 3% from your national bank after 1 year. You can literally invest 3,000 rands and get barely 100 rands after 1 year of investing, and you call that a saving. Now we're looking at Bitcoin or crypto markets in general that can 100x, 600x, 300x. One of the portfolios I'm going to talk about in tomorrow's video gave me 1,150% back in 365 days because I was patient for a year. You guys are patient for FNB to give you 3% after a year, but for some reason you want the crypto market to perform miracles at a hyper speed. You are going to go through
emotional damage. You want some therapy?
Now, to end off the video, why is this happening? Why is the crypto market selling off, right? A lot of people keep asking this. We can go through my special spreadsheet. The reason why you haven't received the video yet is because the COT report for the first week of January only came out on Friday, Bazalone. Please be patient. Ne? And because of that, I want us to get direction for the year. The COT data is inputted on Tuesdays, right? Smart Money records it on Tuesday. It's made public only on Friday. On Saturday, we kind of like disappeared in December. So on Saturday, we had to host a lot of family. People were complaining about not coming over for Christmas, in-laws, blah, 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 all that kind of stuff. So we had family this past weekend. Yesterday, Monday, was the first day of the year with my entire team in in the same town, right? So this whole week we'll be doing team building with my team, my traders, the admin, etc. Just really getting everyone geared for my goals for this particular year. So this year it's manic, right? So right now it's almost 10 to 7. It's the only time I can make this video. But if you look at the data I've put together for you that I'm going to be teaching you guys on, you can start to see, look at this. These are the longs, institutional longs on Bitcoin. These are the institutional shorts on Bitcoin. Because of time, I'm just going to skip over to the percentages because it's easier to read. You will realize that they were 45% long, at the end of November, right? So this is 30 November. You see that 45, but they had more shorts, they had more selling positions, 54% selling, 47% long, increased their long positions by 2%, but they didn't really do much because all they did was to decrease their short positions by 2%. What does that do in the markets? It does nothing. It maintains the status quo. It is a point of equilibrium. And then they went 1% up in longs and 1% down in shorts. What does that do? Once again, it maintains the status quo. We can all agree in general, there are more shorts in Bitcoin than longs. We can easily see this pattern happen with the introduction of the futures contract. So since September, October, November, all institutions have been trying to do at a very micro performance but very systematic level is reduce the price of Bitcoin. Because if I'm smart money and I get a green light to get into cryptocurrencies, I don't want to buy it at 60,000 US dollars. I want to keep putting pressure on who has the pressure been put on you and me, retail traders, those of us who got into crypto last year or 2 years ago or 3 years ago, how about 5 years ago? There is pressure, emotional, psychological damage pressure to sell, because when you sell, you let go of an asset that might be 3x next year or 10x 5 years from now, right? That's all that's going on here, guys. It's a shake-up. Now, if we go to COT, the COT report, the latest on one I've been waiting for all assets. This is as of the 4th of January. It's finally out. 4th of January should have been a Tuesday. Otherwise, yeah, they see Tuesday and the data only comes out on Friday. And like I said, Monday I was busy and I had family, over the weekend. So let's look at this quickly. There it is there. 7,767 long orders. But look at the shorts. 8,371 shorts. I'll break that down into percentages for you in my spreadsheet, which every 365 student is going to get, right? I'll get to that particular point, right? But the point is, even at the beginning of the year, their shorts are still slightly bigger than longs, right? So that's number one, guys. Institutions are back. Holiday is over. Smart money is back. Subscribe to the 365 channel. I give out these signals all the time. I mean, if you could literally be NASDAQ simply by just joining us on on our channel, right? But anyways, long story short, the same is going to happen for most crypto assets, right? There's some that are gonna, fare the weather, but normally speaking, when Bitcoin goes down, it's the pack leader. A lot of things fall. If Ethereum follows, some altcoins will perform, but the most of them will flatline, right? I don't want to spend too much time going through charts because there's still a lot of stuff to get through in this limited time that I have with you. XRP going down, right? You can see where I believe there could be some action for a bounce back. Real quick, because I might never get a chance to say this, buy XRP. Buy XRP consistently all the time up until April when that court case comes to a final end, because XRP, as far as I can tell, is going to consolidate and keep up, down, but dropping more and more up until the court case is done. If they win the case, which I can't see why they wouldn't, there is already massive, big institutional adoption of XRP. If they lose the case, it will delay the pump, but the pump is coming. This is a simple coin. It's currently 13 rands. If you're in South Africa, it's 13 rands per token. One token. You can buy it on Luno. You can buy it on altcoin trader for yourself. Don't get scammed. You can do this yourself. I mean, I can guide you. I can tell you where to go, but you need to control your own wallet. You need to control your own investment. You must be the key holder. Don't give anyone your password. Why? Why would you do that? Some of you get scammed because you deserve it, because you're lazy, right? Literally, buy this and hold. Here's what I'm doing this year. So I looked at my family's spreadsheets of our expenses, and I realized that my partner, Nabagazi, loves buying airtime. So here's a new rule. For every 30 Rand Vodacom airtime she buys, she needs to buy 30 Rand of XRP on a thing. Because last year, in the year 2021, she spent about 2,000 Rands, which is not a lot. I never buy airtime. You'll never catch me on my phone. In fact, I lose my phone all the time. I hate this gadget. But if someone can spend 3,000 which is really not bad. I'm making fun of it here, but it's really not bad. In a year, just buying Vodacom airtime, in 3,000 rands just spent on buying XRP tokens, which, by the way, last year about 6 rands per token. When the pump comes, guys, it is an incredible investment. Just small things. So look, point is everything is falling right now. Why is everything falling? Number one, central banks are tightening. This was our theme last year, guys. This was our theme. We're waiting for the tapering in November. We're waiting for FOMC to confirm that Lira was right about tapering. We're waiting for them to confirm that interest rates will start to go up as soon as tapering is done. We're waiting for them to confirm that QE, which was quantitative easing, which was the printing of multiple dollars, flushing the entire economy with cash because of COVID in the United States and globally, and the unemployment checks that we're doing week on week, the central bank now needs to go. We needed to drown the economy with all this useless cash to help our citizens. Okay, that's what central banks do. But now that we've gone through that stage, we're going to slowly start to kill the QE. It's called a central bank tightening or monetary policy, tightening essentially. So what that means is a couple of things. Number one, they have to raise interest rates, right? They can't do that now because of tapering. You can't taper and raise interest rates. So we know tapering started in November. I broke it down. It's all on the YouTube channel, the assets, the reductions, all that kind of stuff. But as tapering is happening, the next thing that we've started to realize, which is part of the tapering plan, is that once you start this journey of monetary policy easing, monetary policy tightening, what you start to do is you create a knock-on effect, because what happens is you start to increase the yield on government bonds. So government bond is another investment vehicle. It's another type of stock. The difference is a government bond is backed by the government. So imagine this, you're investing in bonds that you're buying from the US Treasury. Those are generally consistently very profitable for long-term holders. By long-term, you can get a 1-year bond, 3-year bond, 5-year bond, 10-year bond, right? It's a non-brainer. Most smart money will move into crypto when QE was big, because those bonds become worthless because you're killing your economy by printing a lot of money. But once the FOMC says we're done with that short-term stage, which is about a year, because inflation is going up and we got to curtail these problems, the yield on those bonds starts to offer more gains. What does smart money do? I tell you this all the time. My course teaches you how to read the markets, number one, so that you can move your little money as if it's big money to grow it. So you start to trade and invest like smart money. So what smart money does is it starts to remove money it put in risky assets. What are risky assets? Crypto is classified as a risky asset. Some stocks, NASDAQ, some of it is classified as risky asset. Equities that are very volatile, right? So you get a PM, a portfolio manager. I should show you my portfolio manager badge. If you see my real account, there's PM in front, which means portfolio manager. But real professional portfolio managers who are handling millions and billions of dollars for their clients, what these Americans, Londons, even South Africans, Alan Gray, Old Mutual, Salem, people in Kenya, your investment banks, they all do this. Portfolio manager's job is to look at your client's portfolio and move the money where you're going to get the best gains. Could be the best gains for 3 months, best gains for 1 year, best gains for 10 years. It doesn't really matter. But what a good portfolio manager will do is he'll take that money that was in crypto and say, look, we did 60% gains on this. Let's take 30% right now and take it back to treasury bonds, because that's secure. That's a guarantee. If it says you're going to get back 10%, you're going to get back 10%. You're going to get 40%, you're going to get 40%. It's a guaranteed thing. So we're starting to see money move back into bonds. In fact, let me just quickly adjust this camera. Sorry. Most of the time, right, bonds are actually classified as a safe haven. All right, so it's just natural. So money is coming out of the crypto markets and going into safe havens. Number two, human beings are predictable. They're predictable because human beings operate on habits. That's why in 2022, I promise you, if you're a registered student, you will learn about trading psychology. I'm so ready for you guys. I've pre-recorded about 22 lectures, and I think that's all we need for module 4. It's all trading psychology. It's literally the type of videos you need to play on repeat for a very long time until you get it,
right? You guys will go through emotional damage because you're not here. You got the technique, you can read the charts, but you're not here. You have to become a trader, a consistent, profitable trader. You can't trade like one, you can't think like one, you have to become one. Anyone can do this. I think I've proven this time and time again. I have people who never had a financial markets degree, 108 six-figure traders. That's not luck. The first six-figure trader I made, maybe that was luck. The 10th one, my little brother, fine, my little brother, but 108, it's not luck. So my point is everyone can do this thing, all right? So you have to understand market psychology, all right? Market psychology 101, human beings are predictable because they repeat themselves. Bitcoin has a cycle of 4 years. 2017 crash. I mean, I don't want to go back to the charts, guys, but if you add every 4 years, every December, there's been a crash. In 2013, there was a Bitcoin crash. Go to your chart. Then they're going to be like, nah, he didn't show us. He's making it up. There's no time for this, man. But let me just quickly show you my charts because I think it's important. I do believe it's important that you understand that we are dealing with specific cycles on this charts, right? And I really am trying my best to keep this video short. But check this out. So let's quickly find Bitcoin.
Where is Bitcoin, BTC, USD? And really, guys, I'm sorry. To me, I really want to keep this short and go have supper with my family. Right, I'm going to go to the monthly time frame so we can see this. Let's go to because it's important you understand what I'm talking about. More important for you to see it, right? Most of you get hampered because of low confidence in yourself. So 2013, November, look at that. December 2013. I'm so good, man. I didn't even check this before I did the video. Not that I'm good. I'm just saying I'm so glad I am right. I'm not making it up. Right, there we go. December 2013, crypto crash. This was before Bitcoin was Bitcoin, before Bitcoin was popular, before you and I knew about it, cared about it. There it was, crashing by itself without your help. In December 2017, the famous crash when Bitcoin hit, you can see there for yourself. If you look down there, there's November and then there's December, another crypto crash. So what we call this? We call this the 4-year cycle. That's called the 4-year cycle for a reason. People are anticipating. So if you add 4 years from 2013 to plus 4 is 2017. If you add 4 years from 2017, you get December. Does anyone remember? Why did you just go dark? Oh, there we go. Does anyone remember? So 4 years added to that is, oh man, I have to clear up the chart so you guys can really see it. There's always that one person who's like, we didn't even see, he's making it up. Right, 2017 plus 4 is naturally December 2021. Which is, did I say Happy New Year? Happy New Year to everybody. November, December, there it is, the big red candle. Right. So we can assess that there is this human inclination to sell all the time in December. Since the beginning of this asset is moved. It's moved in a 4-year cycle. We can talk about Bitcoin halving in the next video and how that helps. But we know that this so-called crash, and I hate calling these things a crash. I do not believe these things are crashes, right? A lot of people who rush to declare a crash on an asset just lack the fundamentals, man, of what is actually going on. But this downward bear market is a better term. All it does is it creates an opportunity to make you a lot of money if you're patient. All it does is it creates an opportunity. This is COVID, to make you a lot of money. There isn't a single Bitcoin pump that occurred for over a year if it did not come back from a significant drop, right? I'm not trying to convert you. I'm simply saying this is just one of the many reasons why we are having a bear market, right? It's almost kind of like expected, right? So what number are we on? We're on number 2. So number 3, why on earth? And if I can just quickly change the view here. Number 3, why are we having
recording stopped.
A Bitcoin meltdown? The unrest in Kazakhstan. So Kazakhstan, guys, is responsible for 1/5 of Bitcoin mining globally. You think back last year when China banned Bitcoin mining, boom, crypto winter. If no one is mining the coins, we don't have new tokens to buy. Right, and if you can afford to buy one whole Bitcoin, which is about 600,000 rands in South African cents, or about 41,000 US dollars, then you're screwed, right? You need miners to keep mining this thing. Remember, Bitcoin is a limited supply. So everybody's rushing to finish all the Bitcoin. This is why you probably want to start buying a lot of it as soon as possible. Because once the supply is done, it's not like cash, where the Reserve Bank can print more cash. Once the supply is done, those who hold Bitcoin now have digital asset that no one else in the world will ever have. And all you do is just hold. It's a holding game. So 1/5 of Bitcoin mining is down because of the protests and unrest in Kazakhstan. Naturally, governments have shut down internet access in Kazakhstan. You shut down the internet, you can't mine crypto. All right, so that's reason number 3. Number 4, the reason why I say portfolio managers and the January effect, role of portfolio managers, you have to take profit. If I have, so first of all, we don't trade for individuals, right? I always have to say that, because then 10 people will inbox, can you please trade for me? No, I don't believe in trading for individuals. I believe in empowering them so you can do it yourself, so you don't get scammed, so you actually understand the process of growing your own wealth, right? So you have to learn to do that. We only operate on behalf of licensed registered companies, right? Long story short. Now, if I'm a portfolio manager for a bunch of companies, and I know that I bought Bitcoin at some point in time came to 35,000, 30,000 last year, 2021, and then flew up to 68,000. And it's the end of the year, December, January. Those companies need their profits back. They want to know what the return of investment is. All profit managers do this with all assets, crypto, stocks, FX, long-term. You have to pay your client back, because that's how you get paid. So I get 50% of all profits invested in corporates. I can't get my 50% for December for all the hard work I did in 2021 until my client gets back his 50%, right? So if we all as PMs, portfolio managers, are looking at December period thinking it's Christmas, it's time to slow down. That's why we say in December the markets have low liquidity. What does that mean? We take the cash out, remove it from the market, we pay. So it's called profit taking. Traders do this, individuals do this. Most of you wanted money for December. You took profit and you withdrew from your account. So imagine if millions of us do that at the same time. Crypto markets were crazy last year. We had an incredible bull run from about August, September, October, and half of November. Of course, some people saw their portfolios go 100x. There were Shiba Inu millionaires that were created. Literally, just a meme coin created a couple dozen thousand of millionaires. All those guys want to buy cars and houses and whatever else they want to do with their money. So they had to take profits, removing money collectively at the same time, right, from the markets, create a bearish sentiment. 365, guys, I mean, I have gone over time. Looking forward. Remember, I'm promising you guys the first big war room is going to be on COT reports. I promised this on Sunday. The reason why the video didn't come out once again was because the COT report for the first week of January, today is Tuesday, the second week of January, only came out last week Friday. So I had to wait. I thought I was going to do it on Sunday, but then we're bamboozled with family. My team came back yesterday, sorry. So we started our workshops for the whole year. So now that I have that data, I'm going to fill it in on all assets for you guys. I have no idea how consuming that particular spreadsheet was for me to put together, but I'm excited because you will now have it. If you're a registered student, you will have that secret tool, and I'll teach you how to use it, as we go by. But until then, 365, man, I hope you know now what's going on. Number one. Number two, I hope you are equipped enough to avoid
emotional damage.
Right, shake my hand. 365. Cheers, guys.